Hi, hello everyone. Welcome to the RBWM series for May 2026. In this series, we are covering all the numericals, objective questions, case studies of RBWM. All of them. In fact, you will see it is carried out for all the subjects. PPB, IIFS, accounts, RBWM. Various mentors are carrying out various series. I am covering RBWM. So numericals, objective questions, case studies, important theory part. So today we will be covering Module A, case studies. See, there are many numericals in Module A, as well as some case studies in Module A, as well as theory questions. So today I will be covering case studies. Tomorrow we may focus on numericals. Watch all the series. See, that's why subscribe to the channel, click on the bell icon, because you are getting daily updates and that also free. Just you have to click on the bell icon. That's it. So subscribe to the channel, click on the bell icon. Let's start. All case studies of Module A, concept plus MCQs. Future of retail banking. The case study is related to future of retail banking. First, read the case. The Indian retail banking sector is evolving. Is it evolving? Correct? What do you think? Is the Indian retail banking sector evolving? Yes, it is evolving. Why? Why is it evolving? Because here, just imagine the banking 15 years back. You all might be not in the banks, but you might be, as a consumer, you might be going to the banks. Imagine, the banking at that time was totally different. Today it's all mobile, UPI, right? Evolving means it has grown. The consumer base has grown. The products have grown. So everything is growing, right? So it's evolving. Always remember, retail banking will always evolve. Why? Why will it evolve always? The reason is growing population. If the population grows, the consumers will grow, customers will grow. You'll have to design new methods to cater to all the customers, isn't it? Now we are having AI, now we are having blockchain. These are the new techniques in banking, isn't it? Driven by increased purchasing power across 400 million middle class households, right? 400 million middle class households. Imagine 400 million. We don't have population that much of many countries, right? Many countries, including US, right? So, power across 400 million middle class households. A shift towards higher spending due to falling interest rates, right? Higher spending due to falling interest rates. Are the interest rates falling? Have you seen this? What are they? Look at the repo rates. What are the repo rates? Where are the repo rates going? You do remember just few years back it was 7%. Now it's 5.25. More on the downward side. So chances are it will go down after in next 2-3 years. We'll see the repo rate falling down more. Okay? So falling interest rates. Because of this, what happens? If the repo rate falls down, what happens? If the repo rate falls down, immediately your FD rates come down. Immediately your loan rates come down. You have to pass on the effect to the customer. Okay? So spending due to falling interest rates and the growth of the nuclear family unit, right? Nuclear family means small families. Now we are all shifting towards small families. Of course, there are various ways of thinking or thoughts. Okay? Means various schools of thoughts. Some say it is bad, some say it is good, whatever it may be. Okay, but the point is we are in banking. So we must take whatever is given. Okay, you should not debate what is good or what is bad. Of course, United family was always good earlier. Okay, always. It is always good because the expenses are distributed. But because of the practicalities now, various you and me, we are moving here and there, right? So that's why nuclear families are a reality now. But because of nuclear families, what has happened? The consumerism has increased. Okay? The COVID-19 pandemic catalyzed a digital compulsion. See this COVID-19, remember? The whole world was stopped for 2 years. And that also recently, right? Digital compulsion. Everyone had gone for digital banking. The most increase, many folds in digital banking happened during COVID only. Okay? So digital compulsion, forcing banks to adapt to consumer demands for high quality in-branch experiences within online platforms. Okay, so forcing the banks to adapt to consumer demands for high quality in-branch experience within the online platform. So everyone was shifting to online platforms, right? And because of that only, means see, there is always a silver lining in the dark cloud, right? There is always a light at the end of the tunnel. So because of COVID, one thing happened, which was good for the economy, but that people shifted to online, right? Because of this only, this UPI, so fast UPI grew, right? So this is the overall case study. Now based on this, we will answer some questions. Let's see. What specific psychological shift has been triggered by the falling interest rates in the Indian retail market? What is the specific psychological shift? Psychological means thinking. The way of thinking is called a psychological shift. So what way of thinking has been shifted? Because of the falling interest rate. See, people are not that much complaining now. Have you seen this? Earlier, almost 10, 15, 20 years back, if the interest rates fell down, there were huge columns written in newspapers that interest rates are going down. What will happen? People will, how will they get the FD rates? How will the old person survive? Many articles were written. But now, people have started accepting that rate of interest for loans and deposits will go down. They have started accepting it. This is a psychological shift. Okay? So, what is the psychological shift? Let's see. Increased reliance on long-term fixed deposits. A transition towards save less, spend more consumer behavior. A total cessation of household savings. A shift from digital banking back to physical banking branch visits. So what has shifted? What have people seen? What is the psychology of people now? Out of these four, what do you think? Increased reliance on long-term FDs? Are people investing more in long-term FDs? Are people moving towards spend more economy? Spending. Kal kisne dekha? Right? The total cessation of household savings. Right? Cessation means closure. No household savings. We don't want any savings. Has it happened in our country? No. People are still having the savings. Shift from digital back to physical. So this is obviously not the case, right? So what is the answer? Yes, what is the answer for this? What do you think should be the answer? The answer is right. B, save less, spend more. The text indicates that the falling interest rates have resulted in a shift where now people want to save less and spend more. Okay? They have to spend more. So that's why consumerism has increased a lot. One more thing has happened. In this spending, people have started investing in mutual funds also, SIPs. Look at the mutual fund corpus. Where is it growing? Right? It is growing like anything. So, Save less, spend more, and in this spend more, they are moving towards MF. Right? Because of what happens because of this spend more? Housing loans increase, spend more. Consumer loans increase, car loans increase, because people are ready to buy immediately now. Because of COVID, many of them have seen their near ones losing their lives. That's why people feel, no, yaar, better, aaj ka aaj jiyo, live in today. Many have started thinking that way. Of course, that's not the right way. Again, there are school of thoughts. That's actually not the right way. Indian mentality is for saving. Okay? So, the answer is B. Okay? Why is rural India highlighted as a critical opportunity for retail banking? Why do we say rural India is the growth engine now? Why is rural India? See, I'll give you a simple, other than these answers, I'll give you a simple anomaly, or I'll give you a simple opposite part. I'll show you. See, 55% of our country, Bharat, is engaged in agriculture or related activities. Agri or related activities, or related, anything. It can be a processing industry, anything, but related to agri or its relation. So 55% of the people are working. Okay? But now if you consider the GDP percentage, that is hardly 16%. 16% this agri and related GDP. Okay? So this needs to be changed. See, 55, it's as simple. Out of 100, 55 people are working together and earning 16 rupees. Right? So this needs to be changed. 55 people need to earn at least 55 rupees. So the farmer's income needs to be doubled, means increased. And that's what is known as the growth engine. Okay? Critical opportunity, growth engine. So look at the options. Because urban markets have reached 100% saturation, because rural households are exempt from all banking taxes, due to the disposal of high purchasing power in rural areas, because digital banking is not yet possible in rural sectors. So why is rural India a critical opportunity? What do you think? Why is it a critical opportunity? Think. Why is it? The answer is think. Is it because 100% saturation? No. How can you say so? Right? Exempt from all banking taxes, disposal of higher purchasing power in rural areas. So the answer is C. Correct? The text identifies rural India as opportunity because it has more purchasing power at its disposal, more purchasing power. Now look at it, rural India is getting more income as compared to the expenses. Okay, many times. Means it's not actually the scene, means somebody might debate on this, farmers are still poor. I agree to that. But the purchasing power of rural India is increasing now. That's what is known as a growth engine. Again, next. Why does the term digital compulsion, what does the term digital compulsion in context of pandemic imply for future of banking? Oh, digital compulsion in context of pandemic. Which pandemic? COVID-19. Imply for future of banking. So what does it imply? Is it banks will eventually close all physical branches to save costs? Customers are forced to use digital tools but expect the same quality as in-person interactions, right? So that is also a point. Customers want the same level of service or even better service on online channels. CEOs are no longer required to manage remote meetings. Shopping needs have moved exclusively to offline brick and mortar stores. So what is the answer? Digital compulsion means what? Think. Digital compulsion implied to the future of banking. What will it do in future? So obviously you are seeing the answer over here somewhat. Right? I am seeing the answers. Answer is correct, B. Okay? Consumers are demanding the same service as they get in branches, even better. Even better. Okay? To use the digital tools, but expect the same quality as in-person interactions. In fact, better quality they expect. Okay? And to be frank, online channels do give, now also they do give better quality than the in-person experience. It has grown to that level. UPI, check this UPI. You go in a branch and give a fund transfer. How much time do you require? Whereas you do the same with UPI, Phone Pay, mobile, any, Bharat Pay, any pay. You try it with that. How much time is saved? And how speedily it is done. So better quality. Right? Got it? How does the nuclear family concept affect the retail banking landscape according to the passage? So how does the nuclear family concept, what is nuclear family, I have explained to you earlier. So how does it affect the banking? It leads to decrease in the number of banking services required. Is it so? It is cited as a factor that may lead to large savings. It reduces the purchasing power of the middle class. It eliminates the need for housing and education loans. What do you think? Yes? What do you think should be the answer? Yes. Does it reduce the purchasing power of the middle class? Does it eliminate the need for housing and education loans? So these two are strictly out. Only the answer is between A and B. Decrease in the number of banking services required, cited as a factor that may lead to large savings. Now this you have to decide between the two. So what is the answer? Correct? B. Lead to large savings. How can something decrease the number of banking services required? Every person will require the basic banking services. Home loan, personal loan, car loan, two-wheeler loan, education loan. And on the liability side, saving, current, FD, and nowadays third party, right? So these will be required, isn't it? So the answer is B. Nuclear family concept is gaining much importance, which may lead to large savings. People are earning more because of nuclear families when they go outside. Nowadays, IT industries, everyone is going there, right? Which of the following is identified as a driver for housing and education loan segments? Driver for housing and education loan. So what is the driver? Means which element is driving this overall business? The elimination of interest charges by the government, the transition of all banking to new normal digital mode, availability of tax benefits on loan repayment and interest, the total disappearance of recessionary trends. So which of the following are seen as the drivers? What do you think? Yes, a tricky one. This is a real tricky one. So the answer is availability of tax benefits on loan repayments and interest, right? Although in the new tax regime 115 BSC, this is gone, isn't it? This is gone. So tax benefits under the new tax regime 115 BSC are gone. They are gone. Okay. But one thing is, it's still there, that whatever you are paying can be shown as an expense, and that expense will lead to lesser income, and then you will pay lesser taxes. This is what is happening in terms of business person, but okay, not in the case of salaried person. Got it, everyone? Clear? Next one. Profitability analysis of Bank A. Bank A has reported total sales revenue of 100 lakhs, right? Or it is, 100 lakhs. 100 over here and lakhs over here, right? So this bank has reported a sales revenue of 100 lakhs for the current fiscal year. Okay. To generate its revenue, the firm has incurred cost of goods sold. Now this cost of goods sold, COGS, this all you have in your branch profitability, 60 lakhs, representing direct production cost. Okay, direct production means your salaries, etc. The resulting gross profit is 40 lakhs, yielding a gross profit margin of 40%. So gross profit margin is 40%. Okay. Branch profitability, there is a chapter over here. Okay. Beyond the production, Bank A incurred operating expenses such as selling, general admin cost totaling to 20 lakhs. So beyond this, your normal salaries and everything, other expenses related to operating expenses are 20 lakhs. Deducting these from the gross profit results in an operating profit of 20 lakhs. So again, say this, 40 lakhs minus 20 lakhs. So 20 lakhs. And an operating margin of 20%. Operating margin of 20%. Operating margin means operating profit margin. So, finally, after accounting for non-operating expenses, including interest payments of 5 lakhs and taxes of 5 lakhs, the final net profit is calculated as 10 lakhs. So, 10 lakhs is a profit net. This results in a net profit margin of 10%. Okay, right. Got it? So, this is the overall case given. Now, based on this, you have to answer. But before going ahead, what is the total case? First, let's look at the case. What is given? It is given that sales revenue, then you have gross profit. First, you get the gross profit over here, GP. Then you get the net profit over here. But net profit is, this is not net profit, this is operating profit. Operating profit. And then after that, you expense, interest is subtracted, right? Interest payments and taxes. Then what you get is NPAT, net profit after tax. Right? Now you might be wondering, these questions are from accounts. How come they are in RBWM? But RBWM also has numericals based on profitability. It has. Okay? Because branch profitability is an important question, it is an important chapter. What is the operating profit margin of Bank A and what does it measure? So what is the operating profit margin? Now you calculate. Take back the video, go back to the video, check, go back to the video and check. What is the operating profit margin of Bank A? Operating profit margin means what? Operating profit upon net sales. Operating profit upon net sales. What was the operating profit? Think, calculate. 40%. And what does it measure? Ability to manage direct production cost or direct your sales cost, basically your operations cost. 20% profitability after direct expenses and SG&A. Okay, means profitability after direct expenses. Okay, and SG&A. 10% final profitability after tax and interest. So final profitability after tax and interest. Operating profit, think of operating profit. Operating profit is different than your NPAT. And last one is 30% and it represents your total revenue. So what is the answer? What is SG&A? What do you mean by SG&A? Okay, it is called selling and administrative something. Selling general and administrative, correct? Selling general and administrative costs. See this, SG&A means selling general and administrative admin costs. So this total is known as SG&A. Okay. So what is the operating profit margin then? What is the answer you have got? Operating profit margin, look at this. Where is the operating? I have written it over here. See this, 2020. Okay. So now the answer is correct, B. Okay. Operating profit margin is 20%. Got it? 20%. And what does it represent? Operating profit is 20 lakhs. Operating profit margin of 20%. What does it represent? It represents profitability after direct expenses and operating expenses. Okay, operating expenses. See, interest payment, taxes, these are not the operating expenses. Got it? Next. If bank A managed to reduce its COGS, cost of goods sold, means your operating costs, okay, by 10%, while keeping sales and other expenses constant, what would be the new gross profit? So if the bank has reduced its cost of goods sold by 10%, so it has reduced its COGS by 10%. So what will be affected? Remember, gross profit is affected. When your cost of goods sold is reduced, what happens is gross profit is affected. Gross profit, see this. Everything cost of goods sold will affect directly the gross profit. So if it reduces the cost of goods sold, see, cost of goods sold is over here 60 lakhs. So by 10% it is reducing. So it will affect the gross profitability. Okay, so the answer is C. See this. Original cost of goods sold is 60 lakhs. And what is it said? That it is reducing by 10%. So 60 lakhs goes down by 10%. So it goes down by 6 lakhs. So what is your new cost of goods sold? It is 54 lakhs. Right? So if it is 54 lakhs, then what is the operating profit then? Sorry, gross profit then? Your gross profit is this total sales minus this 1 crore only, na? Yeah, 1 crore minus 54 lakhs. So that is equal to 46 lakhs. So rupees 46 lakhs. Got it, everyone? 46 lakhs. See, if you reduce your operating expenses, immediately the first thing which is affected is gross profit. Okay? Next. Which of the following is not included in calculation of operating profit but included in net profit? So, not included in the calculation of operating profit but included in the calculation of net profit. Cost of goods sold, selling expenses, admin expenses and interest expense. Pay attention. Net profit it is included and operating profit it's not included. Just now I told you something. Operating profit does not include interest and taxes. Interest and taxes are not included, right? So the answer is D. Operating profit is gross profit minus operating expenses. Operating means what? What do you mean by operating expenses? Where you do the operations. Okay, general and administrative, selling expenses, general, admin, SG&A. Interest and taxes are non-operating expenses. Okay, deducted later. Got it? Based on the case, if the operating expenses increased to 30 lakhs, operating expenses increased to 30 lakhs, while sales and cost of goods sold remain the same, what would be the impact on the operating profit margin? 30 lakhs, the cost is increased to 30 lakhs. So what will happen? Kindly note, if operating expenses are changing, then your operating profit will change. So what happens to operating profit margin? It would remain 20%, it will increase to 30%, it will decrease to 10%, it will decrease to 5%. Now here the calculations need to be done. What are the calculations? I'll show you directly, okay? The answer is C, decrease to 10%. See, new operating profit is what? 30 lakhs increased, okay? Operating expenses increased. So 40 lakh is your new operating profit. How come 40 lakhs? Gross profit, 40 lakhs is gross profit minus 30 lakhs is your operating expenses. So 40 minus 30, 10 lakhs is your operating profit, right? So new margin is what? 10 lakh divided by net sales. So 10 lakh divided by net sales. So 10 lakh upon 1 crore is 10%. So you got the answer as C. Okay? What is the total combined impact of operating expenses, interest and taxes on gross profit? The combined impact of operating expenses, interest and taxes on gross profit. See, here you are talking of gross profit and directly you are focusing on net profit. So why this difference has come? Gross profit is huge but net profit is less. Why? That is what is checked over here. So what is the answer? Total combined impact. So it is, see this, operating expenses are 20 lakhs plus interest is 5 lakhs plus taxes are 5 lakhs. So it is net 30 lakhs. So this 30 lakhs, your amount is reduced from the gross profit. Okay? Got it? Let's move on to the next case study. Again, it's on branch profitability, okay, related to profits of the bank. It's directly taken from your book. Book means figures and the questions are similar to what is asked in the exam. Okay, figures are changed. So, ABC Bank. ABC Bank is a regional bank experiencing a rapid growth in its loan portfolio but facing margin pressures due to the rising cost of funds. Below are the key financial figures. So, this is ABC Bank and now it is trying to expand, okay? Expand its loan portfolio, but also it's facing what? Rising cost. This is always a problem in all the banks. Rising cost of salaries are going high, okay? So, income statement components in dollar millions, okay? So, what are the income statements? See, many expenses are going on increasing nowadays. Salaries, your electricity bills, your rents, okay? Although the deposit rates are going down, but the remaining running expenses, those are huge nowadays, isn't it? So, income statement components. Interest income is $150. Now, this all is in millions, okay? Interest expense 90. Non-interest income 20, operating expense 40, provision for loan losses 10 and taxes are 10. So these are from your income statement, P&L, okay? And these are from your balance sheet. Total assets 2000, total loans 1600, total deposit 1700 and total equity 160. So these are the figures given, okay? Now based on this case, we have to find out various answers. Various answers means various ratios will be asked. So let's focus on them. Everyone got the point? Okay, these are the figures, and based on that we need to find out the answers. What will be the return on asset? Okay, let me change the answers over here. Hold on. So, what is the return on asset of bank ABC? What does it indicate about the bank's profitability? So, what is the ROA? Firstly, you need to understand the formula for ROA. Return on asset. Asset means loans over here. Not only loans, it can be investments also. So, what is the ROA over here? Look at the figures. First, you try it, everyone. You must try it yourself first. Okay? So, how do you find out the ROI? ROA, return upon assets. Return upon assets. Okay, what is my return? Check this. Interest income, interest expense, non-interest, operating expenses, provision for losses and taxes. So, what is my interest income? What is my income over here? Think, everyone try this yourself. All of you should try this yourself. I'll give you the answer, not an issue. First, try it yourself. Income I wanted. Income. See, ROA, return upon assets. Assets I know, 2000 crores. What about the return? Income is given, expense is given, non-interest income is also given. Then ROA, operating expenses are given. Okay. Provisions for losses are given. And taxes are given. So what is the answer you have got? Everyone? Give me the answer. See, the answer is 1% over here. How? ROA equals to net income upon total assets. What is my net income? How did I get my net income? 20 million. How did I get it? 20 million over here. 20 million. I must get this answer 20 million. Have you got it, everyone? 20 million. How did you get this? 150 interest income minus 90, 60, right? 60 minus 20. Okay, 60 minus 20, right? No, sorry. So this is income. So 150 plus 20, add these two. Okay? Add these two over here. Okay, 170. And remaining things you add it over here. So 90 plus 40, operating expenses, provision for losses. 90 plus 40, 130, 130, 140, 140 and 150. Okay. So 170 plus income and 150 minus. So you'll get it 20 over here. Right. So net income you got it 20. Say this. 20 million over here. This 20 million. Okay. So 20 million. 20 million upon 2000 CR is 0.01 or you call it 1%. ROA is generally considered the minimum acceptable standards for healthy commercial banks, indicating that every dollar, or now see in our over here we consider rupees. Every rupee of assets the bank generates 1% of the profit. Okay. So what do you mean? What does it indicate? For every 100 rupees of loan, okay, how much income I am generating? So that's basically 1 rupee I am generating. Okay. Now, is this healthy? Is it not? That's a debatable issue. Means I can say 1 rupee I am getting it, and I am investing 100 rupees. Then why not put my money in some other investment avenue rather than giving this loan? Isn't it? That's a debatable issue. But what does it indicate? For every 100 rupees I have spent, okay, every 100 rupees which I have spent, okay, how much is my income for that? Okay, so that is about ROA. Next, what is the NIM? And identify the main driver of the bank's profitability. So NIM over here, 3.75%, 3.75, interest income 3.75, non-interest income 5.5%, interest expense and 1% total assets. So what, calculate the NIM. NIM means what? NII divided by your assets, right? See, NII divided by assets. That also not NPA, non-NPA assets. So here what will you do? NII means what? Your total spread. What is the spread over here? Check the spread. Say this. Check the spread over here. Okay. What is your interest income? What is your interest expense? 150, 90. Other things are not taken in NII. Kindly note. Okay. It's only interest income and interest expense. So the answer is, say this. NII upon total earning assets. Earning assets and no NPAs are considered. So what is that? 60 million, 150 and 90, right? That was the only figure, right? 150 and 90, right? So 60 it is. 60 upon your total earning assets. Now look at this. Earning assets, 1600. How come these earning assets are 1600? Check this. Total assets, 2000. Total loans, 1600. Deposits, 1700. See, in this, we are only considering the loans over here, right? Because it's NII is basically assets. When you say, we actually consider only loans in NII, specifically in NII. Okay. In ROA, the figures are different. In ROA, you take complete assets. Next. Oh, what does it indicate? See, NIM or NII, 60 million is a core driver. So the core driver is NII. Okay. So what did I get the figure of NIM? 3.75%, 60 upon 1600. So 3.75, and that also interest or non-interest. So obviously it is interest income, because in NII you do not consider the non-interest income. NII does not consider the non-interest income. That is included in ROA. Okay. So NII is a core driver representing 75% of the income. 60 million plus 20 million non-interest. Okay. Showing the high reliance on the traditional lending. So the bank, see, non-interest income is 20 million and interest income is 60 million. So the bank is heavily relying on your loans, right? Next. What is the leverage ratio, equity multiplier of the bank, and what does it signify? See, leverage ratio. What is the leverage ratio of this bank? Think of it, everyone. What is the leverage ratio? Leverage means what? Yes, leverage means what? See, there are two formulas for leverage ratios. One is in your Basel norms, that's separate. And here it's separate. This is a traditional ratio, leverage. So, is it 10x highly conservative, 12.5x moderate leverage, 20x high risk, and 8x lower leverage? What is the answer? Moderate leverage. How do you mean by this? 12.5. See, this is the answer. What is the explanation? Let's see. See, leverage is what? Total assets upon capital. See, this is given in your book also. Assets upon capital. That's why I said there are two formulae. One formula is under Basel, that's separate. And here it's separate. Assets upon equity. So what are my assets? Assets, I know 2000 million, right? It's given. And what is my equity? Equity is 160 million. Where is it given? Let's see. Where is it given? Equity. Equity. Just check this. 160. Right? This 160 million. So your assets upon this equity. Okay? Got it? So leverage is what? 2000 upon 160. So 12.5x. This means every $1 of equity, the bank holds 12.5 in assets, which is common ratio for the commercial banks, allowing for amplification of the return on equity, right? Means what? See, for every 1 rupee which I am earning, I am giving, means which I am having as a equity, not earning. Every 1 rupee which I am having of myself, equity, I am giving 12.5 rupees loans. That's called as leverage. So many times I am giving the loans, 12.5 times. Now this is common for all the banks. All the banks do the same business. Although we as a human being, as a normal person, feel so risky. My income is only 1 rupee and I am taking a loan of 12.5 rupees. Right? It's that's the meaning. But in business, it's a regular term. Okay? It's a regular feature. Got it? Next. If the bank increases its total assets to 2,500 million while maintaining the same net income of 20 million, what will be the new ROA? Simple now. Now this you can calculate it. New ROA. ROA means what? Return upon assets. Okay, what is my return? 20 million. Okay, and what will be my new this assets? 250. So calculate it. 20 upon 250. Everyone do this. Yeah. Everyone try this. 20 upon 250. 25 8 no? Yeah, 8. Something 80 it will be. 0.8. Something will be related to it. See, this way you have to do the calculations. 20 upon 250. Sorry, 2500. It's not that simple. But you can remember one thing. 20 means it will be related to 200. 25 will be related. 2500 will be related to 25. 200 upon 25 you are doing. Net. So you can definitely get this answer. Okay. So what is the answer? So this 0.8%. New ROA equals to 20 million upon 2500. So you will be getting it as 0.008 or multiplied with 100, 0.8%. Now what does it mean? The reduction in ROA indicates lower efficiency in utilizing the assets to generate the profit. What does it mean? I am keeping the profit same, but I am increasing my loans. Asset means loans. I am increasing the loans. So what does it mean? It means reduction, lower efficiency. If my loans are increasing, my income should also increase. Simple, isn't it? In utilizing the assets to generate profits, likely due to rapid expansion without corresponding increase in the net income. Got it? Based on the DuPont analysis, how did the leverage ratio impact the return on equity? Means how does the leverage ratio impact the return on equity? What is it? So see, it's a multiplication. You must always remember one formula. See, all of you remember this very simple formula. ROA equals to what? Leverage into ROA. Okay? Leverage into ROA. What do you mean by this? See, let's get it very clarified at instantly. ROA means what? Your income upon assets. What is leverage? Your assets upon your equity. Right? So what happens? Assets gets cancelled and income upon equity. That is ROA. So that's why remember this formula always. ROA equals to leverage into ROA. Now the question over here is, see, it's related to leverage and your ROE. Okay. So how did the leverage ratio impact the return on equity? It reduced the ROE below ROA. It kept ROE equal to ROA. It increased ROE significantly above ROA. It had no impact on ROE. Tricky one, real tricky one. Okay. So the answer to this is, see this. It increased ROE significantly above ROA. See this. ROA means what? ROA into leverage ratio. Okay, just now we saw this. In this case, 12.5% ROE equals to 1% ROA. Just now we got it. ROA into 12.5 leverage. So you'll get the same answer. 12.5 1 into 12.5. The leverage ratio equity multiplier amplified 1% returns on assets into 12.5% return for the shareholders, highlighting how leverage is used to boost equity capital. Means what? If my bank is getting 1% return on my loans, on my assets, but the shareholder is getting 12.5% returns on the equity. Okay, so everything is working for the shareholder, right? So this is the way it is working. Got it, everyone? Clear this part? All of you? So now, everyone, before going, kindly note the new batches of Adda 24/7 are just in the starting phase. Don't miss the batches. Okay? Download Adda 24/7 app and immediately join the batches. The new batch is starting from 20th February. Okay? Don't miss this. So join it ASAP. Use the code Y432. Okay? In the batch, what will you be getting? See, you will be getting, importantly remember, you will be getting all the details. Okay? All the details in the sense, see, you will be getting all the details like ebooks, mock tests, live classes, recorded sessions, everything you will be getting. And also 82% discount. I would always suggest you to join the new batch on February 20th. This coming 20th February. Don't miss it. Okay? Also remember, you can join the increment Mahapack. This is one of the best Mahapacks. In this Mahapack, you get physical question bank, physical formula bank, question bank, formula bank also, as well as the study planner. You get it directly over here. Plus many other deliverables. Plus you get 15 plus batches per subject. Per subject 15 plus. Huge it is. Right now triple benefit offer is going on. You buy for 5 months, you get it for 15 months. You buy for 9 months, you get it for 27 months, 3 times. And discount same as I told you, 82%. Look at this, but never forget the code. Y432. Never forget this code, Y432. 81% discount plus 1% extra, 82%. Don't miss. Okay? Join it ASAP, everyone.